Folks, I don't know if you heard the news, but one of the greatest commercial real estate investors, Jonathan Gray, has called his shot. He has said we are at the bottom in commercial real estate, which I did not see coming. I didn't see anybody calling that shot. But again, when you have somebody on your personal Mount Rushmore, you've got to pay attention. So let's have a conversation with Jonathan Twomley, who spends a lot more time in commercial real estate than I do, and ask him if A, he's seen what Jonathan Gray and Blackstone called, and B, does he agree? Jonathan, how you doing?
Good. The bottom is in. John Gray
It's
said the bottom
over.
is in. It's over. Yay. We can all go home now.
Yeah,
All right.
exactly.
All
I
right.
don't think so.
So yes, I don't think so either. This was very surprising and it's been the source of a lot of discussion on LinkedIn, and probably if you're on Twitter, probably there too. But yeah, so John Gray declared declared the bottom, and Blackstone just bought a massive portfolio of property, and
79 communities, I think,
yeah,
from AIRR communities. Yeah, great.
uh,
$10 billion. That's a
yeah,
25% premium. I mean,
a, yeah, a bunch of trophy assets and all kinds of stuff. And so listen, the bottom is in. I mean, I think, you know, Jonathan Gray wanted to kind of put a stake in the ground and get attention to what they're doing, but nobody can really call the bottom, right? And I think that, we've just even seen today that that interest rates are climbing again in response to
significantly,
the
yeah.
inflation numbers, right? So clearly that's going to continue to impact um, commercial real estate values. But listen, here's the thing. Um, Even if the bottom is not in, these commercial properties are trading at a significant discount to where they were trading a couple of years ago. And Jonathan Gray knows an opportunity to buy when the buying is good. And it doesn't really matter to Blackstone whether the absolute bottom is in or not, as long as they're getting a discount that they're happy with on these assets, and they have the cash available. They're probably not going in with super high leverage on these
Oh,
deals. So it makes a lot of sense for them. Calling the bottom, I think it's a bit of like hyperbole, maybe he knew that would get headlines, so
yeah.
uh maybe that's the reason why he said that. But I mean, I don't believe the bottom is in. Do I believe the bottom is close? Like, probably we're kind of
Yeah.
probably sort of near the bottom, um and for Jonathan Gray, it's good enough, right? Because
Yeah. The,
whatever
the last 5 to 7, 10%
just don't matter,
doesn't
especially if
matter.
they're planning on holding these assets for 5 to 10 years.
Yeah.
They will be just fine. So
Yeah,
uh
when I thought about what Jonathan Gray did, first it caught me by surprise. I think you're right. I think it
yeah,
was a little headline grabbing. So hey, shout out their marketing team. But it was I really asked myself why. And again, I go back to Jonathan Gray. I put him on the Mount Rushmore as one of the best real estate investors, in out there today. His track record is unassailable. I mean, frankly, he bought equity office at the peak and still made money from that. Go figure. Um, from Sam Zell. And what it really tells me is sometimes being the first mover is an advantage. And I think you said it in your opening. He bought trophy assets,
yeah,
right? Trophy assets over my 30 years of investing, they don't go on sale very often.
no,
And they certainly don't go on sale in a portfolio, right? So I think what Jonathan Gray is saying, I think what Jonathan Gray did with that headline is he basically said Blackstone's open to business.
exactly. That's exactly what I was going to say. He said Blackstone is buying,
So
right?
come
So
to me first.
that's right. Bring us we have a lot of money. We're buying again. Bring
Yep.
us your deals.
It's
And
not pencils down anymore,
yeah,
right?
exactly. This is, and in that, I guess in that context, the bottom is in makes a lot of sense. If he's trying to communicate to other large commercial property owners
Exactly.
that they are no longer, that they are on a buying spree now. Come to
Yep.
us if you're troubled, if you need to out of your, we're not waiting around anymore
No.
for the
Yeah,
bottom
they're
to,
done. They're in.
yeah, we're
Yeah.
in. So it doesn't really matter to them whether the absolute bottom is in or not. And frankly, like, who is 5 years from now, right? Let's just say the market declines another 5-10%
Sure.
in the next year.
Yeah.
Is there going to be anybody who's going to come back to John Gray and say, "Hey, John, You said the
You
bottom was
overpaid.
in.
Yeah.
You said the
No.
bottom was in, but you should have waited 6 more months for the real bottom, or 12 more months. You fool! The bottom wasn't in. You could have done better.
No,
Like,
he's a
yeah,
genius, I think. He's like I think we figured it out. He basically said we're buying
yeah.
and now has a $10 billion kind of, bullet to point at. And I think it's a genius move. Everybody else has still been saying pencils down, pencils down, pencils down. And Blackstone's like, nope, we got our pencil
Yeah.
and we're doing deals. And to your point earlier, just in the last 48 hours, we've seen interest rates skyrocket. It is my opinion, not yours. So we'll see what you have to say. There was a lot of commercial real estate investors who are hanging on by their fingernails, begging Jerome Powell to start cutting
Oh,
rates aggressively. And I think after the last 48 hours, some of those people are like, we're done. Maybe they're calling Blackstone. They're like,
yeah,
okay, I thought I could hold on to this trophy asset. If I don't sell it now, it's all going to come in and cascade on me. You know,
yeah.
take
I
it off
mean,
my hands.
the rate cut narrative is like the wishful thinking story that just won't go away, right? Because there are so many
We're going to be dead
people.
now.
Well, I
Wow.
don't know. I mean, listen, like I'm still seeing people posting the chatter is like, okay, well, when's the rate cut? Not like rate cuts are dead, but like, oh, this just means, well, August now, right? And it just never goes away, right? It's
That
the
just
because
tells me
they're
that people are holding on. Just, like,
yeah, there are there's so I think that there are two camps, or there are two groups of people who are driving the rate cut narrative, right? The first is the people who need rate cuts to survive,
yeah,
right? And they're just desperate for, so they,
yeah,
this is like classic cognitive bias stuff. Like they
yep,
need it to happen, so they're wishing it will happen, and they're grasping onto like whatever evidence there is of potential rate cuts, whether it's like I've seen this the chart, like the average time between the last rate hike and the first rate cut is X number of months,
yeah.
blah blah blah. So they're like, hey, it's supposed to be 18 months, and like 9 have passed already. That means it's 9 months
Yeah,
more.
it's
Like you
coming.
can
Yeah, yeah.
mechanically, like apply this as if this is a rule. And then the other group of people who are driving this are the people who came of age and know nothing other than these
Yeah,
super
that's
low
all they
interest
know,
rates,
right? Yeah.
right? And so they think that interest rates are high right
Right.
now. They're higher than they were, but they are not high, right?
Uh,
Anybody with a long enough memory knows of a time when they would have been thrilled to get,
yeah.
6% on a house or a commercial mortgage or whatever it is, right? Because 6% was seen as like stupidly easy money. I mean, like
Hmm.
back in the late 1990s, if you told somebody that they were going to get like a 6% mortgage, right?
Hmm.
They were like, wow, it's free money. Woohoo,
Yeah.
6%. So this is you with the perspective of time, you see that, this interest rate cut
Yeah.
narrative is just it's all wrong. Everything about it is wrong. And
Yeah.
and then
I agree.
with inflation the way it is, like, just no.
Yeah. Yeah. I think there's growing chances that we get no rate cuts. In fact, I think there's a growing chance that the next move is up, not down.
I mean, yeah. Listen, I think we wouldn't have been saying that a couple of months ago, because I think
Correct.
you and I both said that, hey, we're probably just going to stick where we are for quite some
Right.
time. But I
Yeah.
agree with you. I think that there is now, I mean, it's going to roil the markets if it happens, but I think there's going to be, I
They
think there is
certainly
a,
got to talk about it.
yeah, there is definitely a possibility now that rate cuts could go up a little bit. And I know, it's funny. I'm actually seeing some people on LinkedIn who have been saying, not just recently, but for quite some time, the Fed didn't go far enough. They said
Yeah.
the
I'm
Fed
seeing that too.
the Fed wussed out by stopping the hikes where they did. They should have been even more aggressive and
Mm,
gone higher. Um, and I think that there is some validity to that view, right?
yeah.
So,
I agree.
yeah,
The other thing let's talk about, because again, I think one of the things that I want to see in order to call a bottom in commercial real estate is simply more transactions,
yeah.
right? I think the thing that we have seen is a lack of meeting of the minds between buyers and sellers. And at least in my feed, and now this could just be a bias because I click on them, I'm starting to see more and more buildings sold at ridiculous discounts. I don't know if you saw this building in St. Louis, the AT&T Towers. 2006 sold for 205 million. It just sold for 3.5 million. That's a
I thought that was a
98% discount.
I thought that was a typo. When
No,
I
I
thought they put
verified
the
it
decimal,
multiple times.
I thought they put the decimal in the wrong place. And it's still 35.5 would have been a huge, that's a
Yeah.
75% discount or more. But yeah, $3.5 million. I mean, that is
You
insane.
could
And
recycle the freaking copper and plumbing and stuff and probably get your money back.
I know it's crazy. I mean, I don't know. I didn't read the article, so I don't know what their plan is. But I mean, honestly, if you buy a building that big for $3.5 million, there's almost no way you can't make money,
Yeah,
right? I mean,
you can rent stuff out for $10 a month and make money. It's
yeah, I
crazy.
mean, it's crazy. So, but I think you're going to see in office for some of these older buildings, you're going to start seeing more of that, right?
No,
And
I agree. And really
yeah,
what that building is without even looking at it, it's the old footprint, right? Just wide open in the middle, elevators in the
yeah,
middle, bathrooms there. So it's
it's hard.
at
Yeah, it's hard.
3.5 million, you could be tearing that thing down and make money.
Maybe that's the plan too. I mean, they literally, maybe that's worth what the land is worth, and they're buying it
Yeah,
as a development site. They're going to tear it down, build something new, either a Class A office building
could be.
or multifamily
Yeah.
or whatever. Just on the topic of office for a minute, I just want to.
Mhm.
You've probably been seeing this too, and I don't. I know maybe it's a little off topic, but
All
the
right.
whole the office like apocalypse, right,
Mhm.
is very interesting. Because do you remember, Michael, during COVID when we were talking about the K-shaped economy?
Yep. Yeah.
There is a K-shaped economy in the office space
Oh, I
right now
agree.
as well, right? Because Class A office space, the top of the line office space is seeing rent increases,
It
right?
is.
It's the bottom of the barrel stuff that is just sucking wind. And I was
Mhm.
reading that it's something like 80% of the distress in office is concentrated in 10% of the buildings.
Yep.
So it
I
is
saw that.
just the aged, Class C office space that everybody now, because of the vacancy that's existing, everybody's moving up to
Mhm.
be in a space, and it's that C space that nobody wants. Because why? If you can rent better space cheaper, you do.
Yeah.
And then
Yeah, of
now the
course.
demand for Class A space is so strong that you've got rent increases happening in Class A. So there's definitely a haves and have nots story going on here in office. So it is not
Yeah.
like every office building is sucking wind. It's just this. So the office that's sucking wind is really sucking wind.
Yeah, there's something else I read kind of on this concept. It's not only class A, kind of exceeding, class C, but it's also city dependent. I read a crazy article yesterday that class A office New York, back to almost 2019 occupancy levels,
Yeah,
where San
yeah.
Francisco class A is still, non-existent.
But I've heard some green shoots in San Francisco as
Oh, I'm
well.
sure. Yeah.
Yeah, but I think the real places that are going to suffer are actually
The
some of,
tertiary. Yeah.
well, no, not just that.
No?
Actually, even places like Dallas
Hmm.
and Charlotte and places like that where a lot of the where you've got sort of like the downtown is really just like an office area. There's no reason to go there.
There's no.
There's
Okay.
nothing, there's no there other than offices. And so places like that are actually in really bad shape. So like kind of the doom loop scenario that everybody was saying, oh, San Francisco, New York, they're in
Mm.
a doom loop. Those are actually not the place. I think San Francisco will eventually kind of right
Oh,
the
there'll
ship.
there'll be billionaires
Yeah.
created in the city. We're
Yeah.
just not there yet. Yeah.
Not there yet. New York is
It's coming.
obviously back,
Done.
but the
It's back.
places the places that are just really going to be having a tough time are like
Hmm.
Midwestern cities, a lot of the Sunbelt cities where the downtown central business district, just if there's no business going on, there's no reason to go. And
Yeah,
you know, so,
I
and the
agree with
traffic
that.
is horrible getting into places like that in the morning, and who wants to do it? So
Yeah.
yeah, that's the doom loop that we're going to see.
Yeah. So let's go back to transactions. Obviously, I'm starting to see more and more office transact. Obviously, we talked about St. Louis, there's DC, there's Denver. It does feel like some of the pain is being absorbed or recognized and transacted. Other than obviously Blackstone and Jonathan Gray kind of making a play for 79 Class A communities. Are you starting to see multifamily kind of
I
transact
mean,
or still
like
not yet?
I am seeing a lot of, not a lot. I'm seeing still a consistent flow of multifamily deals kind of coming into my email, but the transaction volume is still way off. There's still a big gap between buyers and sellers. And what's been happening is that a lot of there's been a lot of offers on the good properties that do come to market, and some sellers are kind of taking advantage of that. So the
Mm,
pricing has kind of stabilized. It hasn't really. It's sort of like what's the same thing that's going on in the single family home market, right? Where like the the implied price is down, but the actual prices haven't really fallen that much because there's so little inventory and still a
correct.
lot of money chasing that
Yeah.
inventory.
The
We haven't
clean
really seen.
stuff below the median is still going at
Yeah,
asking or above. Yeah.
it's the what we haven't really seen is the the hit that pricing will suffer when a lot of these losses have to start being realized. And
Yeah.
right now, people are extending and pretending, so they're not coming to market, right? The
Yeah.
distress sales,
That's what
yeah,
I thought. Because again, I think this is kind of back to an earlier point that all the rate cut folks, I think there's a lot of people in the multifamily space that were holding on. They wanted 7 rate cuts in January, then they wanted 4, blah, blah, blah. And it just feels like what happened in rates the last couple of days, some of those people will start to give up. And if I'm right, then we'll start to see transactions in 90 days, 120 days, because
yeah.
you're not going to know you're at a bottom until there's more transactions.
Yeah, yeah. And one interesting thing I did see the other day was, at the height of the bubble, when you would get a an email from a broker with a new deal, and literally it would be like the deal announcement, right? So the first, usually they do some kind of email campaign, right, where they send out like notifications about the deal repeatedly. But what happened was that time frame got shorter and shorter and shorter. So you would actually see in the announcement email a call for offers in like 10 days. So
Oh, wow.
it's like, basically get your butt down here to South Carolina in 10 days and make an offer, right? Because somebody will. I
Right.
saw
Yeah.
a I saw a deal come through the other day where the announcement email had the call for offers date, and it's like sometime in May. It's like 6 weeks from
Oh,
now or 8 weeks from now. So
hmm.
it was
Okay.
it was like, oh, that just stood out to me that like the brokerage community is realizing that they don't have the upper hand like that. I mean,
Mhm.
the sellers don't have
Yeah.
the upper hand anymore. Like they can impose these ridiculously short deadlines on people. People got to take time to find financing that works. You know,
Yeah.
they're going to want to kind of like look at things in a lot more detail than they did just a couple of years ago. So I think that, you know, terms are terms are changing, and I think prices will follow that,
There you
right?
go. That
Yeah.
makes sense to me. I like it. Well, Jonathan, you do a lot of amazing work. You're building a LinkedIn community. You just launched school, which is pretty interesting to me. Where can people find out more about you?
Yeah, absolutely. So please come on LinkedIn, follow me, tell me that you came from this community, and I'm happy to accept your request. I've had a bunch of people come in after last week, which was great.
Nice.
Yeah, it's really terrific. I've had actually people come from this channel and subscribe to my program, which is also awesome. So
Cool.
I welcome that as well. But the best way to get in touch with me is LinkedIn. And if you want to go to school.com, and that's SKOOL, you can search for Apartment Investors Club. That will literally be ready today, I believe. So
Nice.
come and join it. You get my whole course. You get calls with me. I mean, it's a great community. So come on
There you
down.
go. Jonathan, you're amazing, man. Thank you for coming back each week.
Thank you.